The move down certainly puts the ASX into a bit more of a vulnerable situation. So on the bearish count, we were looking at this as wave 1 here, and we were looking for this as wave 2 over here. Now we can still do that as wave A here. Wave B would need to finish off, and then wave C over here. Now this move down here, which we'll have a look at in a moment, is not quite 5 waves yet. Once it becomes 5 waves, then it will be a smaller A, B, and C wave here for this move up here at that point. Now, the other point is that this move here can be counted down as 5 waves. That can be counted as 3 waves. If this can be counted as 5 waves, then we may just get a little ABC pattern here and then move down at that point. So that means that this wave 2 here would actually be over here for this. And what we need to do is nothing at the moment, allow these 5 waves to finish here, allow the rally, and then look to short it on the B wave. This is very much in line with my thinking about the banks, and today I had a look at, in the US video, I had a look at Goldman Sachs and JP Morgan and Bank of America and the regional banking S&P index as well, and yeah, they've kind of got the same thing really. We've just been looking at possible 5 waves coming down and the current rally coming into place for those. So we're also looking for short positions in those banks as well. Now, we're not ready to short it yet, like we're not ready to short this yet, because we don't want to get caught out. If we get the C wave up here, then we can look at, the next move to the downside at that point. But if this is wave 1 down here, like this would be wave 1 and 2 and 1 and 2 here. So then we can short it under here, of course, but we'll try to get the B wave here. So that's sort of where we're at the moment. If we looked at this as wave 1 to the upside on the bullish side, this wave 2 coming back here is quite big. The other play with all of this is that we need to be a little bit mindful about is the banks, because if I can just go over to the banking sector in Australia, this is the US banking sector here, but this is the regional banking sector here, basically. So this is from the top of the market, for the S&P and the banks and all the rest of it. And you can see that we're actually quite bearish here. And a lot of the big banks, some of the US banks are weaker than others, like the Bank of America is very weak. Goldman Sachs is weak, but not as weak as BAC, and Morgan's is stronger still. So, but they kind of haven't dropped yet. I mean, well, the Bank of America has obviously dropped and it's got all the same turning points as this regional banking sector here. And it does appear that we're going to get 5 waves down here. And if that's the case, then we get 3 here and then 5 over here. So quite a big situation occurring for the banks. But what we wanted to have a look at was our bank, so the ASX stocks over here. We could do the XXJ here, and we'll just go, just so we've got a bit of a visual on this. First of all, we'll just go to the weekly chart here, and we're kind of looking at it like this here, in a massive triangle, been going on for quite some time. This is a bit like what China's been doing in its own little way as well. So in this instance here, look, I mean, we could look at this as a corrective pattern. We could look at this as wave 1 up here. We could look at this as an A wave here, a B wave here, but a C wave would still need to take the low out here anyway, But the reason I'm sort of showing the triangle pattern here is because when you're going from like D to E here, I mean, triangles are a set of 3 waves. It's a bit tricky to see it here, but it's basically the A, the B, and the C here, then the A, the B, the C here, but easy to see the A, the B, C here. The little bit tricky to see in amongst all of this as well. So, but if it's going to come down into here, the E wave is normally a little bit more reluctant. We'll end up with a higher low in this instance. And yeah, but they can just continue to work in smaller subsets of 3 as well. So it makes it a little bit sort of tricky. So when we come back to the ASX here, if we're going to come down with the banks, which is likely, right, we could work in subsets of 3 as well. You know, we could look at this as 3 waves here for a W here, an X here, and a Y here, as a bigger W here, then an X, and then a Y, all of that sort of stuff, you know. So it can be a little bit tricky. I'm mindful of the situation. I'll do my best. So what we can do in the bigger picture here as well is, as I always say, that it doesn't matter what degree of structure that you're with, if the in the last, you know, connection we've traded above group 1 here, the 300, and then the number 2 here, it's okay for the market to spike down. But if it finds it as the retested resistance at any time, it doesn't have to come that far down. It can be shorter and all the rest of it. But if it does test it in its own way and finds it as resistant, then we're going to be pulled down to this number here. So this number 2 is quite important in this regard. So it's something that we can also, you know, try to understand within this space here as well. So just getting back here, it does appear that it's sort of quite weak. It still means that it could push up to the 300 and fail at that point. That's possible. Is it bullish? It's very difficult to look at it bullish in terms of this pattern here, you know. And even if I took this low here and this high, and let's just, well, I suppose, but I mean, we did count up here as 3 waves. That's the thing, isn't it? You know, I was thinking that it could just come back down to here as some sort of A, B, and C wave back down to here and then push up. Just wasn't getting the 5 waves here. But I think it's important just to put this in here anyway, so we know that's that 50-60% there. So we'll just go to the 1000 tick area here. And it's the same sort of story. Now we're on the bearish side, we're in 1000 ticks here. So I could look at it as wave 2 to here, right? And then down to wave 1 here, and then an A and a B and a C back for wave 2 here. And then this would make this one here, wave 1 here, and then we'll come back for wave 2 here. So what I'm thinking is that we need to understand from the top here, from this top, we need to understand the 5 waves that move down here, and then we need to understand the ABC pattern that comes back up to here. Now we also know that we could look at all of this C wave down here as wave B, and that means that this could come up here in 5 waves up here before turning. But once we've got our first 5 waves here, right, then we can look to short under that. That would be the safest way to go. This little move down through here, what degree are we in here? So we can just look at this as wave 1 here and 2 here. So we don't have to do anything here today, you know. This will be 1, 2, 3, 4, 5 for 1 and 2 and 3, and let's just 1, 2, 3, 4 and 5, and I just need to move these out of the way for a moment. So this will be 1. This is 1, 2, 3, 4, 5 here for 1 and 2 here. This is all of the 3rd wave here. So there's going to be a 4th wave in here. It may make another little low here, but there'll be a 4th wave here and then a 5th wave here. So that will be 1, 2, 3, 4, 5 here. Then there'll be another 4th wave and a 5th wave here. Maybe I'm dramatizing it a bit too big here, by the way, and then we'll have our ABC pattern up here. And it's at that point here that we can short. So we can put that there of C. That will be 3, 4 and 5 there. We can have that as B, or we can have it as wave 1 and then back for wave 2 at that point, and then come down at this point. So we don't know if it's going to come down. Do you know what I mean? Because it could be just the A, the B and the C wave up here. So we don't know that. That's why we have to look to short after the first 5 waves that are coming into play. That's the only safe way to do it. So it's not set in stone. This can just have a classic trading levels pattern on the 72 and then move up here. So basically we can just, you know, observe this market playing out here. Now, obviously, there's really good support over yonder here for that. So that would be, that's 50, well, 50 is important, but the next level up is 65. So we can go, that will all be group 2 here. So that will be 71, 65, 72 roughly there, and 80. So that's where the support is going to be. Okay, so it's going to get choppy in here, and I may have drawn this a little bit too big in here, but the count is pretty clear in terms of 1 and 2 there, and 3 probably pegged in here, and 4 doesn't really have to go that high there either, and then 5 into here. So there's a bit of fluffing around in here, and I think the important thing is not to lose money in that space. Now, it could extend deeper than this as well. You know, it might end up coming down, you know, deeper than I've drawn it, but there is good support, you know, in group 2 here, obviously. So it's not going to go too far, I don't think, you know. Yeah, so we'll just see how it goes at this point. But that's it at this point. So yeah, this needs to finish off, and then we could get this here. So this is where we need to be sort of careful. So any long trades here, I wouldn't be chasing these wave falls up here. Over here is a little bit different, and we'll go into the 100 tick and the 10 tick or whatever we need to do over here to understand this situation here, because the 72 will be the line in the sand, and if we're patient enough and allow it to mature at this, let the game play out here, and when it's finished, we can pick up and move in the direction we need to move in without being biased on either side. But yeah, the bearish the bearish side of this is definitely you know, taking precedent over the bullish count at this point. Okay, so that's that. The Commonwealth Bank here. As you know, I've been looking for the same thing as the ASX, really. So we're looking at wave 1 here. We can have wave 2 here, or we can have wave 2 over here. There's a good case for it being wave 1 here. We talked about shorting it under this low here. We can go onto this particular point here. Today, this is likely to move down here. But the thing is that it's a little bit hard to work out in here because it's very spiky and gappy and things. But what we could do, if the market came down here, we'll try our best to see if we can count it in 5 waves, then we could look at it coming back in 3 waves again over here, you know. And then, because we've got to get the same timing as the ASX200, you know. So we could move this from this low to the second low over here for this. So we need this to play out, you know, because I don't know if we just sort of come down here a bit and then go up to here, and then we need to sort of work all of this area up here. But we're getting there, and we're getting there with the US banks as well. We've got the same thing happening with the US bank. So we're not there yet, but prepare yourself for a short position. And then we go over to resources. So this is US copper. And as I mentioned before, because we were looking at this going up here as wave 1 and 2 and 3 and 4 over here, or 4 to here, we could allow it to go a bit, but now it's overlapping this here. So, you know, we need to look at it in terms of an A wave down here, an A, B, C for the B wave, and then 1 and 2, and coming down for the 3rd, 4th, 5th. So we're going to see the resources come down. So we may end up having the banks and the resources moving together. If that's the case, the ASX can really scoot along at that point. Is this a short trade? I don't see why not. It may retest the 38 here, depending on what market that you're trading. The 35 is the next number in here, of course, just all the trading level stuff, you know, and then 33 here, 33 in here, and so on. I mean, it had a bit of a retest in here. That was probably the short position at that point, realistically. But anyway, this is, you know, this is what BHP's up against. You know, it's one of the bigger copper things. Obviously, it's got iron ore and nickel and a whole lot of other things as well. But, you know, and we'll get to those nickel and iron ore. We know nickel's weak anyway, don't we? You know, well, this is nickel here really, so this is just another nickel chart. But we're looking at 3, 4 here, and then we're looking at 1 and 2. We've got 1, 2, 3, 4, 5 down here now for 3, 4. Wave 4 will come in, and wave 5 will come in, and I don't know if I need to drag that down. I certainly need to take the low out down here for this, so I'll probably have to stretch this down. But anyway, the point being is nickel's bearish. You know, we've known that for some time. So copper is bearish, confirmed bearish, and BHP, you know, it's in the same boat really, and iron ore is holding up a little bit. So, but I would expect this could fluff around here. This looks to me like a corrective pattern bouncing off number 3 here, 43, top of group 1, but it's corrective, and it's bouncing off the 50% and the top of group 1. So it's doing everything that it should do, but after a while it will fade and move on down in line with those other markets. And this is iron ore here. So with iron ore here, you know that we've got this big bearish moves here that can be counted in a couple of different ways. And I'm just viewing this here as probably some type of correction here with an A and a B and a C wave that can come back to the wave 4s, or 38 here or 38% here. Currently here, I could look at this as 1 and 2 here, then 1, 2, 3, 4, 5 for the third wave, or third wave to here, the fourth wave, and then the fifth wave. So I think we've got a little bit more to go here before this starts finishing and folding over at this point. It's just bouncing off the 700, you know. It's doing everything that it should do within group 1, and we can put in group 2 here and all the rest of it. But this is going to be short-lived now. It's maturing, you know what I mean? So yeah, metals weak. It's also too really when we look at it, the US dollar here, that if you've been following this, the US dollar, we need to push up here. We're pushing up here. Now what I don't know is that, do we push up here for this wave 2 or this wave 2 over here as an A and a B and a C wave over here? There's 2 ways to look at this. But it doesn't really matter for the short term. For the next weeks, we're in this move here, you know. Okay, so stronger dollar, weaker Australian dollar, weaker commodities. So Rio here, this is like my best chance to look at this as being wave 1 here with an A and a B, and 1, 2, 3, 4, 5 here. It's a long shot, but you know, shorting it into the 50-60% and the 100, one being the strongest number, it's going to get pretty choppy and bouncy and all that in here. But I would imagine in one way we'll end up taking this low out down here for this, based on what we can see with, you know, copper, iron ore, all that sort of stuff. So definitely sort of bearish. So I should really just remove that. But, you know, I wanted to try to be positive, but it's reality is taken over fantasy. So I'll need to reorganize these here as well. So I'm just going to remove this. But, you know, the pressure is really on to everything, the stronger dollar, the lower iron ore prices, the figures that came out of China yesterday didn't meet expectations as well. Understandable if you watch a bit of sort of urban news in China. You can see people are sort of suffering on different levels. So yeah, should we short this? You could do, but it's going to be a choppy ride, and probably end up spending a lot of time above and below the 100 here. So as a CFD position here, you would, you see how this happened here, this bounce here. You know, we could, well, I don't think we're going to get a bounce like this, that strong, but we'll certainly get some decent bounce here. And then when it does go through, it's going to do all of this again here as well. So this is like a month here, you know what I mean? So you could spend a month here between and not get much out of this, you know what I mean? And the overnight financing cost is very expensive. You don't see it because they don't show it to you, you know, they just clip your ticket. But if you've got, you know, if you've got 50,000 or 100,000 or 20,000 in there, you would notice it, you know. It can be a lot, the time you add it up at the end of the week. So that's that. And FMG is the same. So FMG is doing all the right things here to become bearish. Obviously, it can be support, it's on support, but normally when it comes down, it has the strongest bounce up, and then now it's sort of sinking into it, isn't it? So eventually, as I've mentioned before, it should come down and then retest it a few times and whatever, and can get a bit ugly, a bit choppy this one, but eventually move down here. So this wave 1 and 2 here, I just can't see it happening because I'm not really getting a 5-3-5 structure in here, so it's not really doing much for me at this point. So we really need to look at this as a I need to remove these here and put wave C. I don't know if it's this top here, probably, and move these over here. And we need to start looking at these as 1s and 2s here. The best way to do it, I'm not quite sure here just yet. I'll just have to mull that over. But in one way, we've got to find the right top. It may be this top over here. We've got to check with the cash market as well. 1, 2, 3, 4, 5, 3, 4, 5. Yeah, that's the top there. So that means that technically, if I had to just sort of stab at this here, I'd be looking at this as 1 and 2 here, and then I would need. I'm just going to take these here, this here as 1 and 2 here, and in some sort of other odd way, this will be, I don't know, I have to check on this. This would be also like some sort of 1 and 2 in here as well. So yeah, it should sort of pick up speed based on that. We could get something like that if we're lucky, but you can see how it retests here. So it's going to be doing something like that. Okay. So this is crude oil here. We counted 5 waves up here with 1, 2, 3, 4, 5. So we can look at it as wave 1 or the wave A. That's the reality of it. This one here, we counted it down. I could count it down as well, yeah, I could still do that, but I probably have to go to this top here, and I should put that here really, and that would probably be 1, 2, 3, 4, 5 in here for that, and this would be 1 ABC for 2 here, 3 ABC for 4 and 5. It looks like it's 5 waves down. It looks like I've got to put wave A here. It doesn't count very nicely as a B wave here. If that top is taken out, you go along there. Otherwise, expect it to drop down to here, and then we have to rework it from this point. That's all I can say at this point with crude. And where's natural gas? Sorry, I meant to just check in on that as well. It's down here on the list. Natural gas. Okay, well, yeah, so as I mentioned before, we're just going to get some sort of classic. Well, it could fail from here, but it doesn't look like it's going to be the case. So we're going to get some sort of classic trading levels pattern here. So we've got the first high above the level here, but I'll need to just check on this to see if this is 5 waves to the upside here. It looks like it's 5 waves down here. So it doesn't, you know what I mean? Like 1, 2, 3, 4, 5 here. So it looks like this is the first little leg here for this. So we'll get something like this. So that might leave that top there exposed eventually, and we can go up on that. But we need to check this here. If you could check that, that would be great. If you're still long in this, the stop's got to stay here until that 250 has become the tested support. Okay, can't move it. You can take money off the table here, as we mentioned before, but yeah. And silver here, yesterday we talked about this being a wave 4, as a little ABC here. That seems to be playing out. Wave 5 could go anywhere in here. I haven't pulled that apart here, but it doesn't matter. It's going to get choppy in here. So yeah, we still need wave 3 and 4 here can pull back to the wave 4 1 lesser degree here, and then we'll need wave 5 to come to the downside here. We probably need to check that trend down there as well. I mean, this counting that little trend in here, if you could spend some time doing that. That's a nice little job. Just in case I've got this wrong here, it looks like this is 1, 2, 3, 4, 5 to here. Looks like this could be wave 3 over here. Looks like we could have a bit more to come down, but definitely be down to the 2300 area here at least. The 20, you'll see a bounce off the 20. You always get a bounce off the number 3. So there'll be some sort of bounce there. So we don't have to worry about too much. If I had to trade anywhere, it'll be to that number. That's silver. This is GDX here. So just roughly looking at this is the wave A here, the wave B here, 1 and 2, and then this here. Probably need to double check. Obviously, this is a third wave here. We'll probably get definitely down further with all of this. There will be support here. We'll probably see some sort of bounce back to this wave 4 and those sort of things. The other option here, so I mean, because it does look like 5 waves up here, you know, that's the thing. So the other option here that I'll need to mull over is all of this just the A wave over here, then we have a B and a C, because I'm not picking it up with stocks, you know. With US spot gold, we can put wave 1 over here, but you know, I'm still mindful that, you know, why can't we put wave 1 over here for this, you know? Anyway, we're coming down as expected, and there'll be more to come down. As I mentioned, you know, the buying opportunity for gold will be when we get to the top here, right? When we can count from here as 1 and 2 and 1 and 2 and then 3, 4, 5 up here, wherever that may be, right? And that's going to take a while. So that means that gold can continue to the downside, you know. Not all gold, different stocks are doing different things, but I'm just saying, you know, it's probably, you know, this little leg here. I don't know if we need to go 1 and 2 or 1 and 2 there. I don't know about that, but this one here is likely to be 1 and 2 here at least. I mean, because gold and the US dollar had the same turning point, you know. Yeah, I mean, you know, I don't like spikes, so I will look at this as wave. We could change it, but let's just look at this here for the time being. We'll put it like this. This won't be too far away from the US dollar. Still, well, I'm still away from it, but still too far away, I think. But yeah, don't worry about thinking about uptrends at the moment. And that means that this is Newcrest Mining here. Well, I don't know what's happening with, obviously Newmont bought this out. I've got shares in this as well. So they've been transferred to Newmont, I suppose. I haven't checked that account. But I don't know that it's the last day of trading. What's that? That's 16th of May. Yeah, I don't know what's happening. I have to read the news. I really don't know. But yeah, they've done a 0.4 swap, and a good dividend of $1 and something, which is nice because all the dividends that they've always had have been crappy. Anyway, that's that. And Gold Road here. So it'd be interesting to see if we make it. Look, the thing is here is, it doesn't matter what's going to happen here. We're going to be bouncing between $18 and probably $2.30 tops, but probably more likely to 221 to 220 to 210 to 220. You know, group 1 above here. So we're not going anywhere here for a long time. Basically, if gold's going to be doing its thing, then we're going to be, we could just correct from this point, or we could make a little high here and then we have an ABC correction. We need to take on board what gold is doing, what the US dollar is doing, what this own individual count is in relationship to the current price here as well, because different gold stocks have, you know, I mean, it's the cost of the product, isn't it, getting it out of the ground, those sort of things. So but yeah, as far as I can see as an analyst doing my job, is that, you know, you would normally trade to the level, you get out, and then you just wait for some sort of, you know, storm in a teacup correction to occur. And then once it's matured and it's rebalanced this particular trend, then we can move back in. It's either that or you just stay in, you know, because gold is doing well. You know, it's been the fastest horse in the race, so to speak. Northern Star as well. Yeah, there's still the possibility we can look at this as wave 4 with 1 and 2, and nice little impulse wave here. Will that push up into wave 3 here? I don't know. I mean, kind of looks like it wants to, doesn't it? As 1, 2, 3, 4, 5. But once again here, if it does go up to the 15, it's just going to latch on here. It's just going to be a magnet. So it's either going to do its business here, or it will do its business up here. Either way, it's you know, it's just a pretty good hold, really. But the other point is that if you look at this here as being 1 and 2 and 3 and 4 and 5 up here, then you'd kind of want to get rid of it up here. And depending on what accounts it's in, you know, if it's in your super fund, well, don't touch it, you know. If it's a trading account, well then, you know, and then if it's a CFD account, so it just depends on what you like to do with it, really. The Australian dollar, so we're seeing the US dollar here push up. It's doing all the right things, and it's just done its little dance at the 200 here, 102. So it's finished now, and now it's going to be pushing up here further. So that's going to push up, which is going to push this market down. It did look like we had a little 5 waves here, and it does look like a B wave here. So we still may get that little C wave up here for that. If this pushes down and creates the first low below the level here, then you can look to short it at that point. But you need to wait for that, because it could do that to you, you know. But overall, this should be trending down. So if you wanted to hold this in terms of some other ETF or something, then that's the trend, and that's all good at that particular point in time. Then we come over to the lithium here. So we've got Pilbara Minerals here. And it does look like this is a little corrective pattern, so kind of tempted to put wave 4 in there finally for that, you know. Does look a little bit impulsive up here as 1 and 2 to here, maybe 3, 4 and 5 in here, or not 5 yet, as 4, and then 1, 2, 3, 4, 5 up here. So I would sort of think that we could look at this as making another little high here, then having a little A, B, C pattern here just to correct this here, you know, and then push up at that point, and we could label this as 1 and 2 here. So so that's that. Okay, I'll just have a quick look at how we're going for time, 33 minutes. We can have a quick look at lithium stocks here for a moment. The US was a bit mixed. Piedmont here was down. The rest of some of these have got different, you know, some tech stock things in there. Liontown's just reacting from the $3 as we expected. We know what PLS is doing. Let's just check on these guys, because they had a nice little move coming up. This is a weekly chart, just checking the volume there first, and this one here. We don't have, but it's only Tuesday, Wednesday, so we don't have more volume than the previous day, but it's looking good, isn't it? Do you know what I mean? Like by Friday, we'll have more volume in this bar than the previous bar, and the same with this one. So this should have more volume in it than the previous one. So that's an uptrend, you know. The volume is confirming the price action. But now we need to see the actual price action with this as well. So I'll just go to the hourly chart, see what it looks like here. This is probably 1 and 2 and 1 and 2 here, and 1 and 2 and a third wave here. So I think we are getting that sort of impulse wave, which is fantastic, really. But the thing is that It could turn into a corrective pattern. It could be an A, B, C for the A wave, the B wave here, then 1, 2, 3, 4, 5 here. That's why you don't chase it. You need another layer of, another 2 layers of security before going long. You know, you could go down here and go, okay, that's wave 5 and that's the end. That means I could go in and buy just here or buy that top there. You could do all of that, but you're better off just being a little bit patient, because you know, if you bought going across the top here or did something like, you know, some sort of method there, then you're really exposed. You've only got one layer of security in terms that you think that that's wave 5 here, right? So that's just one. So what you need is you need to get like at least sort of 3. So if we look at this here, as I'll just do this in very simple terms. If we look at this here, if we're patient, we just let it run, and we can see that we get 5 waves up there. Well, that gives us a second layer of security, doesn't it? So we've got this one, our guesswork here having wave 5 in it. Now we've got 5 waves up here. That's 2 layers of security. And then if we wait for the ABC pattern here, right, then, and we take out the B wave here, that top here, if we take out that B wave top here, then that's the third layer of security here. And what it also does as well, if we get breached there and we take that trade, we would initially have the stop out of the way down here somewhere, but as soon as that's breached, and we're risking 1% here, depending on the size of your account, then we can halve that straight to here, straight away, as soon as that's breached. The same day, next day, whatever. And that means we've halved our risk, we're at 0.5% risk, and we've got 3 layers of security. We've got the first count here, we've got 5 waves here, because if we get 5 waves here, we should have a correction and then another 5. But taking out the B wave here will confirm that this is actually a corrective pattern and help us with this one. So there's 3 layers of security and much better analysis in terms of the trade setup, you know, and we're using a major level here as well, because we want the closest largest number as support in this case. So this move back here is the retest, the testing of this, you know. It's like chasing this high. If you were counting up here, you know, if you call this wave 5, if we had down here and you said, oh, Pete, that's 1, 2, 3, 4, 5. I'm going to go in and buy here, or I should buy above the level, like Pete said, and take the high here, you know. So then you get this one here and you get stuck and you get dropped because you've only got one layer of security in here. Doesn't look like 5 waves up here. Could be, but it's not clear, you know. So you need to build up those 3 levels of security, and then you'll have better risk management when you go in to do things. You'll have a better win-loss ratio, and you know, once that's triggered, and then you move to stop from 1% to 0.5% here, right? And let's just say that the market does something weird and comes back down and stops you out here again. You know, it might just come up here, make a new little high here, and it could have 5 waves in it here. So you get 5 here and 5 here, and then it comes down like this here. But because you've reduced your 0.5% here, that means if you have like, you know, four losses in a row, really you've only got 2 losses in a row because you've halved your risk. Anyway, enough waffling. I'll leave it at that. Cheers.